Thank you for again, first of all, Shruti and Gagan, for inviting me. Super helpful. And my quick background to what Gagan said, born and brought up in India, was there for 27 years of my life. IIT Kanpur, did some operating at ITC, and then was investing at Omidyar. Now based out of New York, kind of helping drive a lot of our India investments at Insight. Um, I think what I wanted to do for this session, Aj, was I think I was talking to Shruti, and I think I talked to a lot of investment folks within India, and I think they keep asking the same stuff. SaaS is where, we feel India will drive a lot of the large, big outcomes in the next decade or two. And, they keep asking on, hey, how do you evaluate whether a company is good versus bad? What's a good benchmark of SaaS metrics? How do we understand and, delve into deeper details of how to look within whether a company is doing good, not good, what are the level 2, level 3 steps of analyzing a SaaS company. One, and second, within SaaS, what are the more interesting trends that you are seeing globally that you think India can front run, soon in some of those assets? And I think broadly what I wanted to do, Aj, was kind of try and touch the two pieces that I kind of keep hearing, given, one of the things that Insight we have done really well for the last 27 years is software investing. And it's something that as a fund and institution, we understand really well, and thought, based on whatever institutional learning I had, based on my experience, kind of doing this globally now, I can share whatever broadly I know out of this. But feel free to ask or interrupt in case, you guys have any questions. And I'm sure Gagan and Shruti will add on if there's anything more that I need to kind of provide context as I go through it. But no question is stupid, because I think few years back I wasn't even as deep into SaaS as I am now. So, feel free to ask anything that you think is helpful. I think so. One of the first things that I just want to make sure as people understand, at least how I look at SaaS, I think broadly this page summarizes a lot on, broadly 7, 8 vectors that helps me really unpack, a good SaaS business from a bad SaaS business. And I think broadly the two vectors across which we measure it, one is like the growth vectors and the other is the efficiency vectors. For a lot of people who kind of, seen people do the mistake is, either focus on growth and not on efficiency, or on efficiency and not on growth. So I think I just wanted to spend 3, 4 minutes just making sure, I kind of share at least what are the best ways on we look at companies across stages, across sizes, in the broader software sector. And this is something which plays true across SaaS, whether you're looking at a fintech SaaS, or whether you're looking at a crypto SaaS, or whether you're looking at like a pure play software play. So one of the first thing obviously is ARR growth that, a lot of the folks look. But I think where a lot of people kind of miss, kind of really understanding and seeing whether, the company can continue hitting and growing the way it is growing, is trying to understand what a net new ARR growth typically looks like. And the way you typically define a net new ARR is, whatever the new lands in terms of, live revenue for that particular quarter was, plus any upsell, and you kind of subtract any downsell for that. And so, that what's the kind of the net new ARR within quarters that a company is adding. And for a great asset that is looking to grow at least 100-150% a year, you will see that net new kind of consistently grow. Companies which kind of go on to flat net news or decreasing net news, or if there's a lot of volatility net new, always kind of throws some question key, this is something where you need to double click on what the underlying factor is, because the company might show a good growth from a base of 4 to go to 12, but from that 12 to become a 30 will become a challenge, because the parameters for you to kind of keep adding that net new to grow from 12 to 30 is very different from growing from 4 to 12. And काफी बार people just see like, oh, 3x growth last year, so 2.5x तो अगले साल हो ही जाएगा. So I think just unpacking and being very sharp about net new becomes very important.
Is there a percentage benchmark on net new?
Yeah, I'll come to it. Next slide में है. I just want to make sure there's alignment on the metrics. फिर the other efficiency factors that become super important is obviously gross dollar retention, net dollar retention. Any public or private company that you broadly look at reports, most of them report on these metrics. there. So I think the reason a lot of times gross dollar becomes super important is just a core indicator of product stickiness and customer value for people who had onboarded. How many of them are actually sticking? What's the retention on those existing customers becomes a very, very important aspect of efficiency, because that kind of plays goes a long way into kind of understanding what the lifetime value of a customer is, and whether the CACs that you're throwing is those dollar efficient in terms of retaining those customers, and you'll kind of continue driving revenues out of those. Similarly, net dollar retention is more an indicator of land and upsell. So typically, if you know that a company is operating at a 130, 140% net dollar retention, which basically means that once they land a cohort, they can actually expand that to 1.4, 1.5x in terms of revenue from the same cohort without really driving or throwing more sales motion at the company, or very low sales motion at that company makes it a very efficient company, and you would see it, that driving a lot of the efficient growth. So a lot of the very fast growing companies will have really high net dollar retentions that kind of indicate that, okay, this company has a good chance of running at a really stronger unit economics compared to companies with low net dollar retention. CAC payback is again a very similar aspect of, what's your sales efficiency? How much dollars do you throw towards acquiring that customer, and how much are you able to kind of actually retrieve out of them? Burn ratio, gross margin, and rule of are very standard things, so I'll kind of not delve into it, but if anybody has a question, more than happy to explain. So to Gagan's question on, how do you basically look at what are good benchmarks, sorry, Sahil, looks like you have a question.
Yeah, just one question. I always am curious. The quality, like net dollar retention, like you said, 130, 140. I'm always enamored by this kind of metric. But how do you kind of segregate? Say if I'm Snowflake, like I'm Frank Slootman, and I hire a bunch of sales guys, and just whose sole aim is to kind of upsell to the existing user base. So I'm kind of propping up my sales and marketing cost, but my net dollar retention will show up beautifully. So how to segregate this retention thing?
No, that's why I think I listed all the parameters that we look at. If you have a very high net dollar retention, but either if your burn ratios are super high, I'll be able to point out that you're not actually driving efficient growth. Simply on it. And also depends, I think a lot of people kind of end up driving customer success costs. You will see a lot of companies which are driving a lot of customization. So usse they drive very high stickiness, very high net dollar retention, but वो customer success काफी बार account related होता है, but वो gross margin में include नहीं करते हैं, वो उसको fixed cost में डाल देते हैं, जबकि when you're kind of deep diving into it, poor gross margin is a good reflection of the customization that happens there. अगर नहीं तो वो at least CAC payback में आ जाएगा, because that is kind of helping you drive retention and stickiness. So I think some of those double clicking in understanding those metrics become super important, and that's why you have to look all of the analysis in that set as opposed to just one metric independent of the other. So in terms of just the benchmarks, I think the way at least I look at SaaS companies is in three ways. One is enterprise sales-led SaaS, the other is products SMB sales-led SaaS, and third is product-led SaaS. And each one of them, these are illustrative numbers, but based on whatever we've typically seen good assets at scale, kind of typically end up, showing some of these best-in-class numbers. So these are just for your illustration. Anything that anybody wants to talk about this, I'm more than happy to dive into it, but these are based on whatever I've seen, some good indications of what quality businesses in each of these segments show. And I can't see hands, so if anybody has a question, feel free to just interrupt. Uske baad, I think just 2 slides just on further double clicking. I think also when you are now, you've invested in a company, but now you're in a portfolio company, a lot of times, I think, I've seen analyst associates really struggle with when you're thinking about how to help a company, not really unpack कि बहुत slow net new ARR growth हो रहा है quarter over quarter. What should I do? how should I think about attacking that problem set or working with the company, people try and just drive multiple vectors, or sales aadmi dal do, or revenue grow kar do. I think they're not able to actually problem solve it into, what is actually driving that slow, net new growth. And so at least this is a good illustration of how I personally and a lot of my team folk kind of think about it is, just kind of once you pick what are the factors in that level one scenario that are concerning and kind of break it into a net new ko loon. So a net new can be a function of, what's your marketing qualified lead to win ratio, तो आप कितना win कर रहे हो from your leads, आप उसमें net retention कितना drive कर रहे हो और आपकी pipeline opportunity conversion कैसी है. And once you see okay, from a benchmark perspective, the company is doing fairly bad on the pipeline opportunity conversion, you can kind of drive that into, quota capacity, pipeline coverage, quota attainment, sales cycle, and you will be like, okay, maybe per salesperson quota attainment has been very poor, and you can therefore go into those specific root causes and kind of solve for that. I think being able to, and the fun part about SaaS businesses in general is from an analysis perspective, they're just so methodical. It's just like a graph or a chart that you can pick one vector and go to your 15th metric and really pinpoint what are the 2 or 3 metrics that are really affecting, your ability to drive growth or scale, and you can actually focus on that. And I think just the understanding of that flow chart will really help you all in being very sharp about helping portfolio companies across, some of the issues that they face from time to time. Similarly, this is another good example of low gross retention, and how do you kind of see it from, you break it into logo and downsell, and then logo, you actually see what the root causes are for those low drivers and kind of attack those typically. But the idea of the illustration was, to kind of point you all towards making sure that you understand that those metrics can actually drill down to 3-4 level deeper metrics, and you can actually attack them in a very fairly scientific way. But yeah, sorry.
No, this is interesting. I think this is logical, but yeah, like we generally miss going into this level 3 part of discussion. Like we end up discussing broader level पे, यार ARR कम क्यों हो रहा है, अच्छा sales बढ़ाओ, जो तुमने कहा ना, exactly यही होता है कि लोग डालो या तुम्हारी sales strategy में channel सही है या नहीं है. But going into 2 level below, you can actually first find out whether there is a other issue which is a like basic issue rather than figuring out completely a new channel or anything like that.
Yeah, and I think that drives more efficient, attack of some of those problems. And the reason I brought this was I've just seen this in so many discussions in companies, in general, कि अरे लोग डाल दो और channel खोल दो, indirect भी कर लो, direct भी कर लो, and all of that, but I think my biggest learning is SaaS businesses are very scientific in analysis if you approach it that way. And so that was the broader illustration. And I think coming into, just the broader high level fixed cost piece of it, I think, as you understand some of these, I think, the way at least we understand is just, trying to understand high level fixed cost basis, पे sales, marketing, R&D or G&A के across में, we kind of build our internal metrics, and this varies from region to region. So I've not thrown up any broader numbers here, but depending on what scale you are, what enterprise SMB या consumer customer base है, sales product led motion है, या transaction plus recurring revenue streams है, we kind of typically make sure that the company is operating under certain benchmarks of, spend, headcount, and performance. And that's something also, as analyst associates, it becomes super helpful when you're kind of working with portfolio companies to kind of benchmark those and make sure that they're actually within that segment, because it's very easy to kind of, drive or play with one or two of these and kind of look at top line, but you lose efficiency as you kind of, not focus on some of these metrics. But essentially, that's broadly very quick session on, before I get into just the broader infra trends that we are seeing and why we're excited about some of those, just things that we think are important on the SaaS side of it. But I'll give a 2-3 minute pause. अगर किसी को कोई question है तो feel free to jump in.
If you can give us some context on यार कि you have seen so many India SaaS companies, like maybe especially given that audience has a lot of people from early stage funds, so like either these companies from 1 to 3 million range, okay, or maybe 500,000 to 3 million range. What do you think is missing or lacking? We as a VC can be aware of 2-3 areas in terms of particularly this few of the metrics which we discussed, maybe at high level or maybe at level 2, level 3 level, where you have seen कि यार यहाँ पे lack करते हैं, and maybe we should be little more careful about it. Like, so maybe things like maybe growth को लेके challenge लगता है आपको, NRR को लेके challenge लगता है typically, या
I
फिर
think बहुत ही category dependent, to be honest, अगर it's very difficult to generalize. But I think one of the things definitely I see is I do think people's understanding of gross margin, varies a lot within the Indian context in actually what is good fair gross margin versus, तो वो जो cost play होता है over फिक्स, जैसे मैंने कस्टमर सक्सेस का एग्जांपल दिया, तो काफी बार अगर आप देखोगे
बेसिकली आज मेरे लिए ये रिवीलिंग था कि कस्टमर सक्सेस हमारे यहाँ मोस्टली बाहर है, मतलब मेरी भी जो पोर्टफोलियो कंपनीज हैं सब में ग्रॉस मार्जिन में वो लोग डायरेक्ट कॉस्ट ले रहे हैं, व्हिच इज मे बी सर्वर, डिवाइस, व्हाटएवर, दोस टाइप ऑफ डायरेक्ट लिंक्ड वेरिएबल कॉस्ट, नॉट अ कस्टमर सक्सेस. ज्यादा लोग, कुछ लोग ऑनबोर्डिंग कॉस्ट को ले लेते हैं, बट कस्टमर सक्सेस इज समथिंग व्हिच इज एक्चुअली नॉट अ पार्ट ऑफ ग्रॉस मार्जिन, एटलीस्ट इन few companies which I know closely.
Yeah, and I think उसी में nuance बहुत ज़्यादा important हो जाता है कि if it is a broader customer success versus account-led customer success या customization-led customer success, वहाँ पे what is gross margin at the end of the day? It is कि बॉस आप जब अगर आप X dollars बेच रहे हो, आपके पास कितना डॉलर्स आ रहा है to finally serve the fixed cost of the business that are not account-led. तो मतलब that's why it becomes critical कि अगर आप for every $100 of sale, अगर आप $70 to $80 fixed cost की तरफ सर्व कर रहे हो, essentially you have a chance of running a 40-50% EBITDA business at terminal value EBITDA scale. अगर आपका customer success 70-80% बढ़ रहा है with every 100% increase in revenue, so then that is not exactly fixed cost for you. And I think as company looks towards IPO scale, people will delve into it, because at the end of the day, the way a public market will value at scale a SaaS company, it's its terminal profitability. अगर कोई भी कर रहा है DCF basis पे करेंगे, हम लोग multiples पे कर देते हैं, but उस multiples का derivative is terminal value cash flow, and that is a function of what eventually you'll be able to kind of see as something that you're netting after your gross margin and your fixed cost there. So I think having a good understanding of that gross margin structure becomes very important early stage पे, और काफी बार you're scaling, so you're putting up those costs, but understanding कि what do you like, you can't sustain like let's say those customizations, या अगर आप कर रहे हो तो आपको पता होना चाहिए कि मेरा cost margin structure या gross margin structure 50% है, 55% है. And you'll find that a lot in SMB sales led SaaS में काफी बार, मतलब क्योंकि इतने customizations होते हैं, इतने ज्यादा request होते हैं कि आप बहुत ही specific account led 4 लोग डाल देते हो, या enterprise sales में 5 6 लोग डाल देते हो जो मैनेज कर रहे हैं, तो फिर आपका ग्रॉस मार्जिन स्ट्रक्चर ही डिफरेंट होगा. और जब आप स्केल कर रहे हो और अगर आप वो पैटर्न कंटिन्यू रख रहे हो, तो you are binding yourself into 55-60% gross margin structures, which are not the best in class. And as board members, it becomes very important to kind of push the company ki boss, tumne early phase mein to drive customer success, to drive retention, you've kind of held on to some of those metrics is good. But over time, we have to phase that out and make sure that we are aligning towards a better gross margin structure. So I think just having an understanding of some of those cost drivers becomes very important in early stage companies, because there is a good focus on ARR and net new. So I don't think usme anybody misses a picture. But I think burn ratio, gross margin, CAC payback, which is your sales force efficiency pay, I think I see a lot of early stage conversations, in early stage board conversations, kind of people missing those nuances and kind of making sure that founders are starting to think about some of these efficiency metrics as well. Doesn't mean that you don't have to burn. It's just that for that burn, how can you drive the highest ROI?
So CAC payback at the like $1 million, $2 million also becomes an important metric to look at it for like as a like growth investor when you evaluate those.
It is. So like I said, I think 1 से 2 million पे अगर 10 month है, वो गिर के 6 month हो सकता है, 5 month हो सकता है. Everybody can understand and see the path of it, because you're driving and experimenting different channels. Some of those efficiencies have to stabilize down. But अगर आप 36 months पे ऑपरेट कर रहे हो कैक पे बैक पे, ठीक है, टू ड्राइव दैट सेम 150% ARR ग्रोथ, जहाँ पे अगर आपका बेंचमार्क पीयर 10 से 12 महीने में कर सकता है, एंड लेट्स से अर्ली स्टेज कंपनी शायद 18 पे कर लेगी, सो देन 36 इज अ रेड फ्लैग.
Right. But my question was specific to the opportunity which you see from India. So gross margin, I can assume, is one area. CAC payback is also the another area which you see as it's a common challenge.
Generally, no. I think gross margin is one I typically see. I think generally a lot of companies I see very early on, because they're kind of trying to transition from India to US to sell and all of that. I think net new becomes an issue growth wise a lot of times. And third, I think I've seen at least SaaS companies that are selling in India, gross dollar retention becoming a big issue. So these are not SaaS companies selling in India to the US, but generally within India, because वहाँ पे your logo churn and dollar churns are a lot high, because SMB sales led SaaS ज़्यादा होती है compared to enterprise sales led SaaS purely from a dollar perspective. And I think that funnel ends up being a lot more leaky than you would typically see in other markets.
Got it. ठीक है.
Also, one question on the slide on R&D and G&A expense. At what scale on
Sorry, Mukesh, I'm not able to hear your question. I think your voice is a little fuzzy for me.
I'll try to be louder. Is this better?
Much better. Yeah.
So on the R&D and G&A expense, at what stage or scale do you start looking at the second level retail, or what is the headcount and what is the performance? Do you do that for say $3 to $5 million ARR companies, or do you start doing that for much larger companies?
So the question I heard, and correct me if that's wrong, just to make sure, because your voice is going in and out, is key at what stage of the company do you start looking at R&D cost, G&A cost, and all of that? And at $3 to $5 million scale, are those important metrics? Am I right?
Right, and not just the spend, also the headcount and performance. And what are the benchmarks for the headcount and performance? Because it's just very hard to get that for public SaaS companies.
Yeah. So I think at 3 to 5 million, is it the most important metric? Do we structure our conversations around there? No, for sure. But if, we typically, given we also have, a large base of portfolio companies at different stages, we run our benchmarks across stages and region, and kind of just how the motion is. So I think if the company is a good 60-70% out of that benchmark, then obviously it's worth the conversation. And also those start reflecting in your burn ratio, or that will start reflecting. Like if I have a company where, because of multiple fat that is sitting amongst various accounts, their net burn ratio is 3x, 3.5x, I will have that conversation even at a 3 to 5 million ARR on why are we, kind of so off the chart on our net burn ratio, because those numbers on an aggregate basis will show up. But अगर एक metric off है, दूसरा metric off है, at those stages, not the most important conversation, as long as it's in the ballpark of, what it should be. Benchmarks, like I said, I think varies quite a bit from region, type, and all of that, because cost structures भी बहुत different होते हैं across regions and all of that. So I can obviously offline always chat about some of these benchmarks, but to kind of give you good benchmarks upfront will be very difficult region to region.
Yeah, let's move forward.
Perfect. So the next theme is Infra SaaS. I think so. One of the things wanted to chat about was key. One of the things that at least I am personally very, very excited about is just Infra SaaS, which is just not limited to software, but across software, crypto, and fintech, where just the software layer or the infra layer driving some of these will be one of the largest set of companies that will drive a lot of large outcomes going forward. And I'm just kind of trying to show why we believe this to be the case. I think very high level, if you see, this is some of the work that, at Insight, we run surveys where we kind of reach out to different personas at high IT spenders globally and kind of try and understand key. आपके IT spends कैसे change हो रहे हैं, especially in these markets, where are things going? Then we further break it down onto amongst different categories of spends. How are you thinking about, do you want to spend more, spend less? What are the subsectors within those that you want to spend more, spend less, and all of that, just to try and index where is the broader category or subcategory going in terms of whether they're facing more tailwinds, headwinds, as some of the sales translate. So I think broadly high level, with whatever is going on in the market, broadly, the high level TLDR was ki IT budgets, and speed of tech change impact nahi hoga. Continuous operations have always kind of been emerged as a key priority area, and 88% of the enterprises don't predict any cut to their IT budget. In fact, some expect increase, some of the spend that they are doing. And within that, if you see, if you're going to further break it down, infrastructure and security have been two aspects of, the broader theme that will actually see a good dollar increase in the spends that happen, compared to, let's say a sales tech or an HR tech, so-called good to have productivity apps in general. So, so the idea is, when you think about resiliency of revenue, infrastructure SaaS is something which across times, including these times, will hopefully, in our thesis, based on whatever we've gathered, will continue to remain very, very solid. And you can kind of even see that, अगर आप application software, infrastructure software को grow करते हो, अगर आप major companies के guidance उठाते हो, they have tend to grown faster, even on an LTM basis and even on an NTM basis, based on whatever the guidance is. There is a good 700 bips difference in how do you expect infra companies to grow compared to application software. And therefore, why the excitement around infrastructure in general. I'll take a quick case in point, because I can go into deeper details of infra. Is a very wide topic. वो उसमें DevOps, cloud security, data pipeline, बहुत कुछ आ जाता है. खाली if I just use a case in point of a detailed survey around just DevOps. So if you see, just within 3 years, there have been a 700 bips change in just enterprise adoption of DevOps. You can see, how there are companies that are even spending more than $5 million to like $25 million plus on just DevOps budgets. And 80% of the respondents that we had reached out to as part of our internal work on just understanding subcategory spends had expected increase in DevOps budget in the next 5 to 10 years by at least 10%, with 60% of them already spending more than $250,000 globally on some of these. And that will just give you some sense on just the resiliency of the category in general, and why like DevOps, as an example, is a category that we are excited about. When we think about the broader landscape of SaaS, and within that, why one category is something where we are very, very bullish on. So that's why, if you see, like, as we have deployed money, we have had a bunch of investments within the broader, browser stack, Postman, Tricentis, JFox, Sonar, Scicode. We've kind of been very active in kind of making the bets across a broader DevOps stack that we have kind of broadly invested in. But I think just making sure there are multiple trends to touch upon. So I'll quickly touch upon, at least, on the software side, when I think about DevOps, what are the 5 themes or trends that we think will drive, large successes going forward. One was that, microservices is one that we expect, large applications to kind of roll up into very smaller independent parts software solutions, which will kind of enable more modularization of applications to kind of build a lot more scalable and resilient systems. So companies like Docker, Aqua Themes is one thing that is becoming very, very interesting. The second thing is, we believe that, ops as a category is moving much more closer to development. So there is, room, like, I think the whole silo around development, security, and operations is kind of going away. So there are a lot of next gen software vendors that are kind of enabling platform engineering teams to kind of build those guardrails and reusable components, so that developers can fully own and build the whole deploy process, as opposed to go through different siloed processes. Third is the whole Jamstack architecture. I think the idea is we believe that this has become more ubiquitous, kind of decoupling from the front end web development, from the whole backend data, and kind of helping drive business speed and scalability across the broader API JavaScript markup ecosystems. Fourth is there will be a lot more testing and monitoring application scaled that will happen. And a lot of our bets around Postman Browser Actor Synthesis was around those themes that are continuing to kind of see those tailwinds in general. And third, there'll be a lot of machine learning adoption, and therefore will give rise to a lot of supervised and unsupervised MLOps tools to kind of drive some of the models into production, reducing the need for homegrown manual solutions in general. So that's like very high level 5. I can speak for 2 hours on just DevOps as a category, go really deep onto it. But I think I was chatting with Shruti and Gagan. I think that was the idea, is just sharing what are the 5 trends that it form a thesis on what are the interesting categories going forward. Coming quickly, that was software as an example. Then if you think, infra, a lot of times people just think of infra just for software. One of the things that we also are excited about is that those are just not limited to software. Like if you just pick up fintech, there's a lot of upside to picking the picks and shovels businesses, because any software business that is underlyingly driving a typical fintech, you're kind of betting on the derivative of the market, and you're essentially you're not trying to pick a winner. So अगर एक कैश ऐप जीतता है या वेनमो जीतता है या जेल जीतता है, as long as you are the driver of that product category that is happening there, instead of picking a winner amongst them, if you are driving that, you would win as a whole. So it kind of helps you hedge your bets and also kind of aggregate and win from the upside across a market, as opposed to one versus the other. And so one of the things that people don't appreciate, some may not, there's a ton of infra that goes behind a typical fintech application. So just agar aap cash app hi le lo, so I'm just very simplifying it. There are 5 major infra applications that happen: account access management, card issuance processing, fraud entity management, trading, brokerage infrastructure, fiat on ramps. And there are companies which have built large businesses around just serving one of those infra layers, for these large applications. And I think just appreciating that will give you very interesting insights on how large this category is, just not in software, but within like these vertical themes like crypto or fintech. That becomes super interesting. And I'll come to crypto in some time. And the best part is, I'm just used, without revealing the name of the company and all of that, just one standard benchmark illustration to show how software fintech infra companies have very much software like resiliency, very high net retention that is built into these businesses, very low CAC paybacks, very high logo retention, or gross retention, as you think, basically. So it's broadly sales like efficiency. And within these businesses, there's a lot of upsell built, because if you are serving, a square, and a square grows to become what it is today, you're essentially growing with it. So there's a lot of upsell that is already built into that broader motion. Therefore, durable retention and incredibly strong retention becomes a key aspect of it, which makes fintech infra very software like. And therefore, if you see a lot of these businesses trade at a solid multiple compared to pure play application fintechs in general, because of these broader themes. So very quick flash into how complex this is. Just a banking stack, and we've just tried to break banking stack into different themes. And if you see, from internal layer, institutional layer, data layer, API layer, there are various themes that are very, very interesting, where you're seeing a lot of infra businesses, starting to come. Account access management is one, banking as a service is one, card issuance and processing is one. We made an investment M2P in India, which serves some of these. There are interesting themes coming around, money operations, and there are companies which are going very deep globally around just solving for treasury, capital access, payments and forex exchanges. There's some which are solving for cash in, cash out, payment reconciliation, ledger as a service. Then there's some like Pinwheel and all of that. We're just working on data layers in general, like public data, payroll data, payments data access, wallet data, and all of that. So in general, if you break down, and kind of run your theses across some of these aspects, you will see really large companies solving for some of these standard problems, especially as fintech start to operate globally on some of these themes come up. just using one deep dive as an example, if you just look at, next gen card issuing stack, this is a good example of just the amount of functions that go into a typical, issuer processor that you see, from a credit card or a debit card or a prepaid card perspective, from driving KYC fraud, card management, analytics, compliance, transaction authorization, selling, clearing, instant issuance, real-time management, just-in-time funding, open API. So, people think of it as very simple infra stacks, and there's a lot of product depth that goes into kind of building some of these businesses. And, depending on which player is serving who in which region, some of these aspects become very important and some of them become not so important. And as you guys look at diligencing some of these businesses, I think understanding the depth and the range of services that is possible, and kind of picking where you would want to bet as the next success, or the most important aspects of what will drive customer acquisition, retention, wedge becomes very important. Therefore, if you see the broader stack of just next gen issuer processor within the US itself, there at least been from FinServe to Marketer to now a High Note or a Lithic, so it's something where you're continuously seeing next gen solutions kind of continuously coming to evolve and kind of still take a large part of the market. And this market itself is so large that you can build large multi-$100 million businesses out of just making sure that you're serving niche use cases in great detail across some of these vectors that I've pointed out as. Similarly, BaaS is another piece of it that I think will also see a lot of its play out coming within the Indian ecosystem. Ledger as a service, payments, digital capabilities, credit card issuance, and all of that. We made an investment in the US in a company called Unit, which kind of does that, where any consumer tech business or fintech, can link to a box as an API and kind of issue and open up their banking services without going to the hassle of all of that. But there are companies which are kind of going really deep into one or two of these aspects as opposed to this overall solution. But that's like another piece of it where you will see very interesting, I would say, sub verticals and niches also coming, and overall one in all solutions kind of being sold there. But in general, if you're bullish on fintech in India, these are themes that you should be typically bullish on. Very lastly, just crypto infra, to give you very similar examples. If you kind of mind that, break that layer, disaggregate and unpeel what a typical crypto infra layer looks like, this is what the stack looks like. And where, even when I look about where the next layers of success is without knowing what application will win or not win, we kind of super excited about is these consensus infra and primitive layer, because that's kind of driving a large part of the success behind these application layers. And if you kind of track a lot of the broader aggregated revenues that are being reported at an industry level, the most resilient ones, despite the volatility in the crypto space, has been the infra layer compared to the application layer. And that kind of points towards just the resiliency of the revenue, and why sometimes betting on infra makes a lot more sense than trying to pick an application winner in general. But that's very, very quickly on these broader thematics and details. But happy to pause and maybe spend last 15 minutes answering any questions you guys might have.